Thank you to all of our speakers and to our current speakers on the stage right now. And thanks for everyone for coming. We spent a lot of effort putting this together. And this is our first ever OffChain global conference. So this is a historic event for us. We have 72 chapters around the world, and we do much smaller events. This is the first time that we're doing a bigger event to put a lot of our founders, chapter founders together, coming to the same place. So looking forward to the discussion today. So I want to get to know everyone a little bit, but also ask a question. So can each of you guys give us a brief intro and how you got into investing? I know that some of you went from investor to builder, for example, like Arthur here. Let's start from Arthur then.
Good morning, Kuala Lumpur. How's everyone doing? Come on, Malaysians, make some noise once again. Good morning, Kuala Lumpur. How's everyone doing? Once again, thank you so much, OffChain, for conducting the inaugural OffChain Global Conference. And it's exciting to be in my birth country, in Kuala Lumpur, right over here. To all those who just came to Kuala Lumpur, selamat datang. A big welcome over here. So I have been in the investment finance technology for the last 15 years. Started off as my career with Franklin Templeton, Aberdeen Asset Management, BlackRock under the largest IFAs all back in Singapore, which are known as IPP Financial Advisors. Built entire asset under service to about 50 over million American dollars portfolio, and then that's where I got the AUM to be acquired by the primary company, and then that's where I went into startup, lost a lot of money in a startup, failed to startup miserably, and then the third startup I got acquired. And then that's where I transitioned to Web3, because I was wondering, hey, I've already been involved in investment, in technology, and what's next? And then I think the previous session was just talking all about ownership and all that, and that really gave me a lot of curiosity. So that's where I went into the Web3. Very typical routes as a lot of the other users, I believe, went into mining. And then after that, my first Web3 was a venture studio I set up. Over back in Kuala Lumpur, really primarily helping startups and projects to be scaling and to be growing. But unfortunately, in the year 2022, we all know how catastrophic that year was. And then fast forward right now, I'm currently spearheading a DeFi project, which is known as FILLiquid, which we have just gone to mainnet. It's a lending and borrowing protocol for the Filecoin ecosystem, allowing for the users to lend, farm, and stake to earn higher passive income, and for storage providers to be unlocking the locked assets in the miner node to pledge as collateral. So that's pretty much what about me.
Wow, thank you for the wonderful introduction, Arthur. Hi everyone, I'm Miranda and I'm from Hong Kong. It's my first time visiting Kuala Lumpur and I like the city. It's really great, the food is really great. I love it so much. Yeah. So maybe just a little bit about myself, like similar to Arthur's background. I'm also from the traditional banking and finance industry, which I worked many years in the banking and some big asset management firms. I used to work at Credit Suisse, which got later merged with UBS and also BNP Paribas, and also some open-ended fund. So it was actually quite a funny story how I got into Web3. Because, in the traditional finance, like the banking and finance industry, like when the investor and like the fund manager or the portfolio manager, when they make some investment decisions, there are so many works that you need to do, like from the very beginning, like conducting research on the company to like checking on the company's financial statement, income statement, balance sheet, quarterly financial reporting and all that, and come up with a valuation model and write out the equity research report. And also sometimes we have to visit the the client companies and to conduct due diligence check on site. There are like so many works to do, which I work very late till very late. But I just feel like Web3 is such like a relaxed and like a laid-back space. It's like it makes me feel a lot better. I just wanted to say, oh my God, why I have to do so many works on making an investment decision, and it sometimes end up being rejected by the fund manager, and all my efforts like just went into nothing. But in crypto, it's just like, okay, the set fraud phase looks nice. The pepet. Okay, just go with pepet. Place your bet. Okay, just place your bet on pepet and then just wait for the outcome. You know, it's like there's no due diligence check, no financial statement, like no all that, you know, lengthy paperwork, no compliance to do it, which is a lot, you know, fun, right? So I think I got into investing in Web3 because of the fund. I'm talking about like 5 years ago. That was my perspective back then. Was like I'm here to just to consider it as like a casino, and I buy what I want. I place my bet. If it wins, I'm happy. If I lose, I feel nothing. Yeah. So that's how I went into Web3, and now I'm running like a Web3 project. It's called Era. It's on social fi. Is that we allow the KOL to use our platform. We invite them to be onboarded, and their fans, like their followers, if they want to see the KOL's post, they would need to like subscribe to them by like staking tokens of Era. So it's like showing a kind of support to the KOLs that they liked. So that's how we came up with this project. And yeah, that's my story so far with Web3.
Thank you, Miranda, and welcome to KL. Hohoi samhaindo kindole. So I'm originally from Australia, as you can probably tell from my accent, but I've actually been living in Asia for 30 years. Started out in Hong Kong, and back in those days, obviously Web3 didn't exist, but I was into crypto. So I'm the guy who actually encrypts all the bets at the Hong Kong Jockey Club. That was my first job in Asia. Anyway, I worked for 4 traditional enterprise software companies, some of them you may have heard of, and was lucky enough to go through 4 exits through that process, and then became a professional investor about 5 years ago. And through my early angel experience, I realized that being an angel investor was pretty much a mug's game. So started about a year ago, started a fund called Func Ventures. And for those of you that are programmers in the room, probably understand what that means. So I invest in API first companies. Or another way of thinking about it is headless SaaS. And I don't treat Web3 any differently to investing in Web2. What we as VCs are looking for is something that will make money in about 5 years from now. Are we looking for outlying companies that are perhaps not so obvious? If everyone thinks it's a good idea, we don't invest in it. So we look for things that are a little off the kind of beaten path. I'll give you an example. And the last panel was very interesting for me because I've invested in quite a successful KYC platform now called Frankie One. When we invested in them in 2020, they were around, they had 2 or 3 customers. They've now got over 200 customers. All the banks in Australia, Afterpay, and many of the exchanges use them as their KYC platform. So that's my background. Thanks.
Thank you very much. I like what you said, approaching the Web 2 elements to the Web 3 investing. I think that's very important. So many people forget cash flow is actually very important to sustain through multiple market cycles instead of just raising additional capital and doing on follow-on rounds for a product that barely has a market fit. Anyway, I'm William Purdy. Thanks everyone for being here, and thank you for inviting me today. I'm from New York, but as they said before, my company is based over in Switzerland. I'm head of investor relations and co-founder of Markl Investment Management. We're a $45 million hedge fund. We focus specifically on Bitcoin and Ethereum options. We don't trade liquid tokens. Don't do any of the VC side. Just focus on trading volatility. My background started fresh out of college, raising venture capital for biotech companies at an investment bank in New York City. After 2 years of that, I caught the crypto bug in 2014 from one of my best friends, one of the best traders I know. He'd been hounding me from 2014 to 2017. A lot of you guys probably joined during the 2017 market. That was probably the largest or start of the retail investment phase into cryptocurrency. That caught my eye when New York Times started writing large educational pieces on Bitcoin mining, the investment that China was making into Bitcoin mining, doing all these capital intensive things or investments that are required for the sustainability and the growth of the Bitcoin blockchain. I thought that said a lot about the future or the potential future of what is a very speculative asset. So in 2017, I'd been an equity trader independently for a few years before that. I just became a BitMEX trader. During that time, 25, 50, 100x on BitMEX, a lot of fun. 2018, I moved over to California from New York. I worked with a professional baseball player, Tyler Atkinson. He played for the LA Dodgers MLB team. He started a crypto hedge fund called Blockterra for MLB and NFL athletes in America to get access to crypto assets. In 2019, moved back to New York. I worked for an old Y Combinator company called TradeCypher, offering crypto research with a crypto exchange attached. In 2020, I met my co-founders for my current firm, and in October of 2021, we started with our mission of becoming a volatility trading firm. Over 2.5 years, we now work with some of the largest traditional hedge funds in the world, some of the top 5. We also work with a lot of funds that you guys might be familiar with, as well as a lot of market-making partners. That's about me.
Hi all. Yeah, my name is Lucius. Yeah, unlike others, yeah, I'm born and bred here in Malaysia. Then, yeah, so basically I started out as an actuary here. So I work in a local insurance company for about 2+ years before I get to understand more about Bitcoin, and then that's how I got into the crypto space. And then after that, there was a DeFi season, and that's how I get into the space by joining CoinGecko. Basically, over there, yeah, I have to publish some books and some market research. After that, I moved on to Binance, basically help to review projects for listing, for Launchpad, Launchpool, etc. And recently, I joined Animoca. So basically, Animoca, yeah, we are essentially more like a crypto, I would call it an investment bank. So essentially, we have projects from the start to figure out how to create legit, the crypto projects, and then release the tokens, and then how to market it to the exchanges, etc. So we do a lot of services like market making, KOL management, tokenomics, node validating, etc. And then so I joined, mainly we invest in a variety of projects. So we are famous for metaverse and gaming, but recently we kind of explore out into more like crypto infrastructure and DeFi and any other kinds of potential use cases like SocialFi or even RWA or even KYC projects, etc. So I think the space is still relatively early, and a lot of use cases have a lot of potential. So basically, yeah, I'm actively look out. So if there's anything you guys build that's interesting, yeah, feel free to reach out to me as well. Yeah, I think that's a little bit about me. Thanks.
All right, thanks guys. Moving forward, I like to get as much out of you guys as possible. So let's keep our responses to try to under a minute. Our intros took 20 minutes, so we only have 20 minutes left. All right, let me get a quick raise of hands. Who's looking for investment in the audience? All right, we got a good number of people. So my question to you guys, I guess like this is specifically for Lucius, Chris, and Miranda. What are you looking for? Like, who did you give money to in the past? And what are you looking for in terms of a potential team or project that you can invest in?
Okay, sure. So I want to talk about how my perception on crypto, turning from crypto as a casino, like how I felt 5 years back then, to what I feel now is more like value investing. I have this kind of methodology, is that crypto is getting very mature now, so it's very, the concept of value investing is very adoptable. And to me, that I'm looking for projects in Web3 that, like, when I evaluate as to whether there is potential on a certain Web3 project, firstly, I will look at if it has like technology that is like groundbreaking, like there's real technical part support and it's like solving real world problem, and it also, beside the technical part, it also has like a good business model. The business model is scalable, because I think that right now, even though the market size of the crypto market is still not comparable to the traditional finance market, but I am seeing a growth, and probably with more and more people joining crypto and getting into this industry, the market cap, I'm just like expecting and forecasting and hope for the best. It might outperform the traditional stock market someday. So what we invested now today, it might turn us into maybe like millionaires, billionaires in the next 10 years. Who knows, right? So that's why I now only choose projects that has value. But even though I have considered and picked the projects that I think it contains the real technologies that can pose a change to the world, I would not be buy and hold forever. Some people may disagree with my point of view, and they might disagree my view with the example of Bitcoin. And why I'm saying this is that because I'm a trader in my spare time. I like trading. Trading is my hobby, and I just feel like that the value investing concept doesn't mean that of course, you have to choose the project that has value, but doesn't mean that you have to buy and hold the coins or the stocks forever, because you still have to pick the right entry point and exit point based on the market conditions as well as the fluctuations. So my strategy is like a value investing, which I choose projects that has a strong technical backbone, but at the same time, I choose the good entry, like a good strategical entry point. I will try to buy the coins when the price nears its support level, and try to leave and exit when there's too much bubbles, or when the price is nearly the resistance. So I just think that, like, even though we have the concept of value investing, it doesn't mean that you can leave your money in the market and then go to bed sleeping, because I don't think that's a kind of like a responsible action to do from like a trader's perspective. So that's my strategy. So in value investing plus the good market entry and exit point.
I'll be fast. So I don't invest in coins, I only invest in equity. I'm looking for companies actually in the infrastructure space. I think blockchain is very early days. So given this is the off-chain event, if someone's got some interesting platform play in the real world space, that would be interesting to me. Thank you.
Yeah, so basically I think Animoca now, we focus more on the token investment, essentially. And then we are focusing more on early stage, basically those projects that without a token yet. And then what I'm mainly looking at is a lot of times is, even though a lot of people hate to say it, but it is an attention game for now. Basically, I think the projects need to have a very strong grasp on what's the current narrative, and then how they plan to, at least in the short term, rise alongside it. I mean, there's always a long-term element, a fundamental part where the projects have to build. Ultimately, that's what maintain the secondary market price. But at the start, it is still a very important skill to garner enough attention with how you basically package your narrative, right? Essentially, if you get the attention first, you will get the funding, and then you will get the users. I mean, that's how crypto works, and then it's a very financialized game. And then you have to really know how to play the games, and then after that, then we only talk about how you plan to properly maintain the value of your projects, essentially. So basically, we are on the lookout of anything that's interesting on the market right now, mainly like telegrams, Ton related stuff, and then any kind of improvement to the base layer, or even projects like Birrell, Monad, Solana, etc. Essentially, I think. Yep. That's all.
Okay, so I got a question for William here. Because you're not necessarily investing in projects, right?
Right.
So, but you are trying to outcompete other funds like yourself with, like you said, some of the biggest institutional investors.
Yep.
So how do you stand out compared to your competitors?
Right. As a hedge fund, you are judged entirely and solely by one thing. That's your end of year performance net of fees. There's the risk profile component, but every investment has a risk profile component. So everyone is aware of that. So you're looking for an orthogonal risk exposure, counterparty risk, whatever that looks like. There's all sorts of risks in crypto. And then you're looking for the strategy that generates the most alpha with the best ratio of exposure to risk. Risk can always be mitigated, investments can never be removed. So for us, the way that we approach the market is actually more of a macro approach because we're only dealing with the two largest assets. We're not too concerned about, again, what Pepe is doing, what Trump token is doing, or even real world assets, or DePIN, which do bring legitimate infrastructure things to the market. We're trading solely around the volatility of price action of Bitcoin, which then trickles down to every altcoin at the end of the day, right? The last rally led by Bitcoin, followed by alts. It happens every market cycle. So the way that we position ourselves are actually kind of counter or pre-positioning to the altcoin plays. We saw Bitcoin ordinals begin in 2022 or whenever that launched. I'm sorry if it's maybe 2023, early of that. And that thematic element of the ordinals or tokens on the blockchain, then you saw with tokens like Stacks and Pepe, that then became a trickle or follow-on thing, which then propelled as Bitcoin pumped through October. That led to those relevant thematic elements then pumping. So the way that we view this is kind of narrative driven, pre-positioning for narratives, Bitcoin ETF. How are we going to do into that months ahead, right? We're not talking about the day before. It's very hard. It's playing roulette. If you're trying to gamble on what's happening tomorrow in the market, it's the same thing as going to the casino, black or red. Those are your two options. But when you're talking about, we're typically trading 30-day expiries on our options. So we're looking about a month out to the market. You're looking at the macroeconomic factors affecting traditionally the US market, specifically QQQ, the NASDAQ or the tech sector, followed by interest rates, and then crypto native narratives. Bitcoin having Bitcoin ETF, ETH ETF, any news from the SEC. So we're actually a systematic firm. These narrative things are not things that can be programmed without the use of some sentiment tools. So it's a lot of price action. It's a lot of looking at the volatility surface. It's a lot of market structure things which are just native to any asset that's freely traded on an exchange that has both demand and supply. It's a lot of just that imbalance between the two and trying to squeeze out some sort of recognizable alpha in that with the backdrop or the overlay of a narrative approach.
No, but I kind of want to get to the people aspect of it. Because I really like your responses, but it feels diplomatic. Like we at OffChain, we're all about people, getting people together in a room. Because, as organizers of OffChain, we've seen people get together. We've seen people find investors. We've seen people put together projects, find partners, find other people to work with. So, tell me more about the people aspect. I want to move to Arthur, because I have a question for you. Because you were an investor, then you were a builder, you failed in startups, but then you kept going. and then you say you got acquired, and now you're working on something else now in Web3. Like how, because you've been there before, you've been on the other side of the table. Like how do you now, like when you're trying to get investment, like from your last startup or for this startup, like what do you do in order to get investors interested?
So I think one of the best narrative, as a builder who came from the investment industry, I think one of the priceless gift is to understand the psychology of how investor thinks. And every time when I'm building a project and when there's a need to pitch a project, it's very normal for us as builders. We have the domain expertise of the product. And too often, we tend to complicate a lot of things. And we delve so deep into it to the extent that the investors were not able to understand at all. And let alone Web3, right? Guys, it's so complex, right? Probably except for meme tokens. I think that's something that my mom understood among all the verticals. Meme tokens was the easiest thing for my mom to understand. Actually, I do a lot of trainings with my parents actually, like to ensure they were able to understand the project that I'm building. And if my parents able to understand, then that's it. Which means, I guess, the investors will understand. Primarily, I think it's very important for us as builders when we are pitching to investors is to put ourselves in the investor's shoes and to understand what exactly the investors are looking for. And few things, I could just share with you one of my experience. I have received funding from Plug and Play from Palo Alto in a startup that it got acquired. And it was only a 5 minutes pitch. And honestly, it didn't even go into details. I didn't even open the pitch deck. He only asked me this question, Arthur, why do I need to invest in you? And it was really very natural me coming out because, mate, I failed so much in life. I failed my 2 startups. I was bootstrapping. I failed miserably. And I shared all the pain that what I've went through. And here he is, he just wrote a check to me, after sharing a story. He gave me this handshake policy, which I didn't understand. So apparently, over back in Silicon Valley, there's a handshake policy. Once that the handshake it's given, which means money will be in within 24 hours. And I think that has been one of the mottos. It's to I think investors essentially investing. It's also the characters of an individual. Just very recently, Jensen Huang, the founder of NVIDIA, I love this quote that he said, the greatness of people, it's not how intelligent you are, but the greatness of an individual, it's about how much pain you have endured. And that pain that has what make you to be more resilient and having a stronger degree of tenacity to thrive in the project that you're building. So essentially, I don't look into vanity metrics anymore. I look into primary metrics, first and foremost, whatever project that I'm building right now, to ensure that I have a team fit. A team fit is that we're having that team dynamics, and whether I ask myself whether can I endure that pain, navigate that pain during tough times. When doing triumphs, it's just nice to laugh with your co-founder, right? But you ask yourself whether your co-founder will be there with you when your project it's almost the amount it's almost emptying in your wallet, and whether your co-founders will be there navigating, weathering this adversity with you. Number 2, it's the product fit. Oftentimes, I always ask my team, are we building something that what the community wants, what people really want, and to making the life easier, to making the life simpler? And if that is the case, then I think we are building something solid. If it's not, quickly pivot. And last but not least, it's a market fit. Am I building a project, a product that's big for the market to be using to solve a real problem? And I don't look into vanity metrics in terms of social media, because I know all this is not what investors are looking for. I primarily focus into the real fundamental, the TVL, the adoption rate, the retention rate, the churn rate. and also the network activity, and also how strong the community engagement is.
Thanks so much. So I want to kind of build on what you just said and ask each of you guys, like, how do you find people to work with? How do you find projects and teams, people, right, to invest in? Like, where do you go besides off-chain conferences or off-chain events to meet great people to work with, to just be acquainted with, so that our audience can know where to go if they're looking for investment? Chris, can we start with you?
Thanks. Yeah, so first thing is that I have to agree with Arthur in terms of I like people that it's not their first rodeo, that they've got some pain behind them, and either failure or success. Obviously, success is probably better because they're probably in a better mental state, but failure is also okay. But in terms of where do you go to find, you just never know, actually. The key to it is actually networking. In here, I don't know if is there any other people here in the room that actually are investors, not just startup founders? Right. So, I just started the chapter for VNTR in Kuala Lumpur, so you should join VNTR. We talk about this at our events, and Janet is here from VNTR in Singapore. So, if anyone's really interested in finding startups, network. As an ecosystem in Malaysia, we're pretty small. We kind of joined at the hip a little bit with Singapore, but it is actually really important to network and look under every rock. The other thing that I do, because I'm looking for API companies, I look at things like Stack Overflow and these kind of programmer type communities and look at what APIs everyone's using these days and where are the gaps and try to use my radar that way. I go to things like QCon in San Francisco and try to understand the developer's perspective.
I guess I'll just speak briefly. We're a team of 7, 3 core founders, and actually for the first 2 years of our business, none of us have ever met. So we're about 3 years in now. We met about a year ago. I think the beauty of Web3, crypto, 2024, whatever it is, post-COVID, is just the accessibility to the whole economy, the real world, all digitally, and that allows for the seamless connectivity of minds, ideas, skills, talents, everything that makes you're able to bring out to the world, to not just your local community, but to people overseas on different continents. There's 7 of us, as I said. We're on four different continents, 5 countries, and for the first 2 years, while we were growing a successful business, from cash flow negative to positive, none of us have ever met. But we were able to do that because on our path to growth, which started with just 3 of us, we focused specifically on running and operating as lean as possible, meaning that everyone had to have an individual skill set or ability that the others could not directly duplicate. What that allowed us to do is then run, one person is doing trading, one person's running models, one person's doing sales and marketing. That's basically all you need to start a hedge fund when you're starting. As you grow, you obviously need more. But that being said, focus on the core deliverables required to complete tasks, generate revenue, or whatever hurdle or target you guys have to hit that next round or that next year. Focus on those deliverables. Get the people who have those skill sets. And like he said before, networking is incredibly important. The people that we've hired most recently are actually people that we just were casual friends with in the crypto network earlier on, doing other odd jobs with. So you really never know what's going to happen in this path of the crypto market, the market cycles. People move in and out of this market professionally as the 4-year cycles come and go. Everyone's joining during the bull market. A lot of these guys, as funding dries up, move back into TradFi or whatever industries they were in. focus on the guys that have a unique skill set that add the most value, but make sure that you guys can trust each other such that if you're working internationally, disconnected for years on a laptop, you know that other person is doing all of the work that's required of them and then more. I would say if you're hiring employees at that point, that's the most important, is that trust aspect. And then secondary is the skill. A lot of skills can be taught. Honestly, most skills can be taught through YouTube nowadays. Focus on who a person is and their ability to grow into the role that you're providing for them, as well as the path forward.
So I do it in a very unorthodox way. I spend quite some time on site events. I also realize there's a different vast personality between the morning site event and also in the night site event as well. So I'm very focused. If I'm going to go for a night site event, I primarily, right now, now I have to build a team in Malaysia because so far I'm the only Malaysian. So if I'm going to go to a night site event, then that's where I'm looking for people who are more frontliners, who are people who love to socialize. Subsequently, I do it in a very different way. I will take them for a morning hiking for a nature, morning breeze to experience that. And honestly, you will be surprised the amounts of information that you were able to get with the person and understanding the dynamics of the person in the morning. First and foremost, whether the person will be, I really wanted to do running, but then not everybody runs. So I thought hiking would be the easiest way. Everybody able to walk and hike, enjoy the morning breeze. Punctuality is very important because I work on the precision of a German. So if it's 7:30, means 7:30 a.m. If it's 1 minute late, that's where you lose 20 brownie points. And I think just spending time with a person, 45 minutes in a jungle, so that's really the second date with the talent. I know that can be a bit different, right? But you'll be amazed what sort of talents you were able to get. And it's been proven that, and maybe to builders, maybe you might want to consider that, especially early in the morning when it's completely peaceful and quiet, and you get full undivided attention. Yeah?
All right, we have 3 minutes left, so let's go with Lucius, and we'll finish off with Miranda.
Yeah, I think regarding teams, I think crypto is a very borderless industry. I think there's a merit to it. So just be. I think I always like teams that are people that are proactive, as in, the space has literally no barrier now. There's no certain way, like a certain formula that you can get to success in this space, and then just have to reach out to people, talk to people. If you want to build something, just build it right, rather than trying to figure out what's the perfect solution. And then a lot of them just hack out some things on the first try, and then try to find a tribe to learn together and then to build stuff. So I think, one of the main thing I try to see is that whether they are proactively trying to solve the problem that they're claiming they are going to solve, and then whether they are resourceful in this space, essentially. And then resource can be whether it's your network, it's your skill, anything, right? Just show some works that you have done, and then a lot of doors will open. And then, so I think trying to find, so I think talent in this case, is very global. So I think the differences is that over here we have access to so-called the global talents, right? Anyone that have basically put in the work will be shown, will be seen, and then try to seek out for those people, and then if they consistently deliver works, and then I think that's more important than a lot of the pedigree. So I think that's one of the magical things about this space. Yeah, I think that's how I see it.
For me, I'm looking into people to work with who is persistent, because for my project, it has been ran for 4 years. So it was started in 2020, and many people joined the project community, and many people left because it's not easy for people who rely Web3 project as their main source of income, but I'm still looking for people that who is able to support himself or herself, who is able to cover his or her daily expenses, have like additional income source, because I think in the Web3 space, the market is like difficult. It's like not easy and pretty much very, very difficult for projects to live and grow and turn perpetual. You know, it requires a lot of hard work, and sometimes those hard work doesn't pay off. So I would not blame that for the people who I select that work with me who left after a few months or a year. But I would say that this industry is different. So the efforts you pay off is a different story. It's sometimes just like doesn't, there's like no positive outcome, and then you just need to insist that the project that you're doing it has like a real value. Like for example, the project I'm running, which is a social fi project, which gives the support and monetization methods to KOL, because we find that the KOLs they are posting on Facebook, Instagram, and Twitter for free. It's very hard for them to monetization, and people sometimes just like doesn't worth their efforts that much, and we just feel like those KOLs hard work didn't get paid enough. That's why we create this project and kind of like create a monetization way of method for KOL for their works to be respected. That's why we insist that what we are doing has a value. That's how we insist, and like even though we are still like looking for people to join the community and make it out someday.
Awesome. Well, I want to add something to finish us off. Come to OffChain. Like some of the best friends I made is because once I found OffChain, I started organizing events. Obviously, I'm there for each event. So when you come to each event, you start seeing people who also come to each event. And those people oftentimes can become good friends and potential partners and working together. So thank you to our panelists. Thank you to our audience.